자, 이어서 다음 발표도 청해 들어보겠습니다. 글로벌 세틀먼트 네트워크의 라이언 커클리님께서 전 세계 CBDC 트렌드와 전망이라는 주제로 발표를 준비해 주셨는데요. 여러분 큰 박수로 환영해 주시면 대단히 감사하겠습니다.
Hi, I'm Ryan Kirkley, CEO of Global Settlement. Thank you for having me. I'm here to talk about CBDCs, beyond borders, from pilots to productions, and what the future of government currencies are really starting to look like. So first and foremost, I'll start with what is a CBDC. So CBDCs are central bank digital currencies. They come in a couple different forms. There's wholesale, there's retail, and then there is a cross combination of them. Now today, we've only really seen sandboxes and then two formally published ones go through. Right now, wholesale work is advancing the fastest. This is settlement, remittances, things, and tokenization, but cross-border settlement remains the unsolved frontier. Regulators, markets, and builders are all looking at this in very different ways. You have the policy side approaching this as a how do we continue to have the regulatory AML KYC approach? You have the technology side and how do we implement into legacy systems? And then you have the market side. Today, the markets are ready for this. They've just demonstrated this through the rise of Tether and others. However, we've seen many other opportunities emerge in this space. Currently, cross-border payments are slow, expensive, and limiting growth in most of the world. For developing economies, we see, upwards of 10% going to sending money across times. Right now in the G20, the average is 5.9%, which means that if you're starting to send $1 billion investment into a country, you are losing millions of dollars in the process and thus stopping growth because you need to make more money back. This creates additional risk in the intermediaries and FX. Places such as Africa and parts of Southeast Asia still settled to colonial banks in Europe. And this means that the average settlement time can add an additional week to 2 weeks as it goes through KYC and AML. So what's been happening and what is going on today? So we've had many pilots, Enbridge being one of the most successful with Ubin and Jasper. Enbridge reached MVP in 2024, enabling cross-border FX payments. This, however, was not a full implementation of a CBDC, rather showing that the framework could exist for the Bank of International Settlement to be able to move this forward. Korea also has been moving in the right direction on CBDCs, and we're very excited to be continuing to talk with them on this. The BOK CBDC program, supported by BOS, has begun working on real-world pilots with wholesale CBDCs and tokenized deposits with a couple of entities. Still pending the legislation action, though, moving forward here, but we see it moving in a very fast and meaningful direction. Policy controls, sovereignty, and safe interoperability. First and foremost, every central bank needs to be able to be in control of their digital currency. What does this mean and how is this important? They need to specify user-specific limits, rate access tiers, compliance, traveler rule compliance, AML compliance, all the way down to how much lending, how much finality, and how much volume can go across the chain and rails at any given moment. When you look at the current economic retail activity, international tourism expenditures, remittance inflows and outflows, these are all exceeding in the hundreds of billions of dollars, experiencing these 5 to 10% fees, along with cross-border payments on the wholesale side greatly exceeding. We see up to $10 trillion per month going across on the wholesale side. Why is this the biggest opportunity in crypto? Is quite frankly, just the numbers itself. The second side of this, though, is how do you get to where this actually provides a better and faster experience? And that's deterministic finality and auditability and traceability. So what you need to be able to do is show that the transactions occurred on both sides of the parties, that it's occurred atomically or instantly, and that it has this trust and traceable verification for all necessary regulatory partners and sides. Similarly, you have to be able to interlink into the legacy systems, PVP and DVP cross-border, SWIFT with ISO, et cetera. This is something that has slowed down previous implementations of other chains and other projects, as we have seen a significant challenge plugging into the legacy system in place today. Now, what does this mean and what does it actually take advantage of here? So as you can see, we have Governor of the Bank of France who is talking greatly about the potential for these settlement times of CBDCs throughout the extensions, around how this can operate 24/7, 365 settlement, how we can have DVP for tokenized bonds and equities, PVP for FX, but it gets even more exciting in the sense that you can start to use things like tokenized gold, treasuries, oil, and futures to be able to actually use that as liquidity to settle across FX transactions. This will allow for event-time bank upgrades, allow for almost zero liquidity crises. It would have actually most likely prevented a 2007 mortgage collapse if you look at the ability to leverage other assets into immediate liquidity. And so this gives a much more stable, fast, and efficient banking environment than we've ever seen before. However, one thing that's still very important is privacy, both from a government side and an individual side. And so that's something we're very cognizant of as we go through with the government projects, talking about how we can support both sides of this equation. Now, who are we and what have we done? So GSX, our global settlement, has built an institutional-grade settlement network for digital money and assets. We approach this first and foremost with interoperability in mind, being able to plug and play into almost every other blockchain that exists today. The second side of this, though, is making sure that we are ready for regulated cross-chain compliance and settlement. What does this look like? What does this mean? It means that in real time, we are able to say that this is bank actor A, who has the regulatory approvals of these 7 licenses operated out of the United States. And this is Bank B with these 4 licenses operated out of Korea. And we know that there is the SWIFT codes here and here, and ISO messaging can plug in here. It allows us in real time to verify both actors. Then we can verify the actual amounts coming in, and then settle the transaction in less than a minute. This creates a much faster, safer compliance mechanism, but it also creates a much more predictable market and liquidity pools. It goes direct written into destination networks. There's no custodian bridges, so there's no chance of hacks or all of the things that have previously hurt crypto from a security perspective. Now, can get very deep into the technical architecture, but I'll keep it pretty light. So one thing that we really focused on to make this different was to operate with a POA and a POS consensus mechanism. What does that mean? The first is a proof of authority. This proof of authority functions as the regulatory layer. It sits on top of all interactions inside the network across other chains. So this regulatory layer can be everything from policy, KYC, AML, SWIFT codes, and various other checks. This allows, for example, you could take a Connexus, which is JP Morgan's private blockchain, and allow it to settle to, say, Stellar, which is what Franklin Templeton currently uses today. Currently, to do that transaction, they would have to offload and reload onto different FX rails. They would have to go through, right now, it would likely be a Chainlink or CCIP, and the entire interaction can take anywhere between 12 to 76 steps, depending on the regulatory procedures. Then we move to the POS. So we offer a finality layer that operates through ZK settlement proofs, decentralized consensus, and most importantly, provides a quantum resistance. We believe in the next 5 years, as we build the future of the financial markets, we also need to prepare for the future of computing. And that means that we have to be ready to face faster computers, quantum threats, and just in general, hacking potentials. Lastly, this allows us to natively write back to the chain. So gone are the days of having to transfer your asset, say a stablecoin from USDT Ethereum to USDT Stellar. This will actually allow for one universal ledger and one universal proof. Now, why is this important compared to traditional bridges or traditional routes and mechanisms? First and foremost, a traditional bridge takes custody of the asset. The problem with that is that's actually illegal in most jurisdictions, and most banks have a personal policy of not wanting to have $1 billion plus sitting in someone else's third-party wallet. Additionally, if you are truly a decentralized chain, there is no place to be able to hold a decentralized asset like this. So we take an approach of a no custody ZK state transaction, which allows for this to settle between both parties without a true third party taking an interaction in the process. It is one, a far safer interaction, and two, gives a much clearer regulatory vision. The second is on the validator side. Previously, you would use relayers. Relayers are rather susceptible to third-party brute force attacks. This allows us to have an authority-based proof. Therefore, you cannot even interact with this interaction without first passing these KYC and regulated sides. Then you have the finality. Normally, a finality is passed through in a message, which then means you have to then translate and mint the new token or new currency into your blockchain. Instead, we allow for this native right finalization, which means that for the first time ever, rather than sending tokenized gold from, say, a bank in Dubai to a bank in Korea, where you would have a transmission to FX, typically US dollar, then into local currencies, while at the same time having to move the physical gold, you could now take a gold that's Brinks backed and keep it in one bank, in one vault, doesn't matter where it is in the world, and functionally move the liquidity across. Lastly is the audit. Anyone who's been in banking and anyone who's seen this world knows just how difficult it is to audit FX transactions. This gives us one unified audit trail across the entire banking, across individual FX settlements, and further. Now, the best part of this, though, is the programmable compliance that travels with the asset. As we've heard from all the speeches today, lots of talk about tokenizing stocks, lots of talk about tokenizing various real-world assets, all the way over to money markets, stable coins, et cetera. The problem with this is every one of these exists in a different jurisdictional model, exists in a different blockchain, exists in a different environment. This allows us to create jurisdictional policy modules that can be cross-pollinated across any kind of ecosystem. If you're trying to connect Korea to the United States, yes, they're two different regulatory bodies, but we can set the programmable rails to make that one place, one time. The second, though, is the selective disclosure using zero-knowledge attestations. This is where we get into the importance of privacy and what does it look like. This is super important here because, for example, an individual cannot execute a transaction in a manner that allows for this to occur. They can have a complete privacy side to themselves, to their government, while at the same time the government has full access to, say, a transaction going above 10,000. The next side is the full regulator explorer with immutable logs, real-time KYC AML alerts, all the way over to being able to monitor active sanction lists and sanction compliance. One of the toughest things for most countries in the world is the fact that the United States, at BIS and World Bank have some of the strictest policies, where a country that doesn't have the most complex financial technologies is not really able to real-time monitor this. This leads to them receiving higher interest rates, lower grades of trust. That goes away with this system. We are now able in real time to say any transactions operating inside of a CBDC unified ledger attached to these regulatory solutions are able to operate in a seamless and efficient manner. The other side, though, is having government-grade SLAs and what this means. So we use a BFT class consensus, HSM keys, multi-sig failover, deterministic finality through sharding, and horizontal scale when needed. The ISO 2022 webhooks for core system sync also play key roles in creating a multi-chain operating environment that has the cryptographic security necessary for this to occur. It allows for instant tokenized bonds, equities to interact with, say, KRX. It allows for sellers to deliver tokenized security, buyers deliver CBDCs, tokenized deposit, settle atomically. It also gets very interesting for a government because they can now take their currency and back it by more than just gold or others by tokenizing their own assets. For example, we are working with an African country right now in the initial stages of a pilot. They currently export roughly 30% of their exports through gold and rare earths, and at any given time they control about 20% of them. It currently doesn't touch their currency at all, which creates a major gap because at any given time there may be $20 billion flowing in and out of the economy inside their vaults, yet their currency is currently only backed by about $6 billion in gold. There's no reason for this. You could create a much more stable and much more valuable currency that gives a much bigger outcome for, say, third world countries like Africa to be able to do this. The second, though, is they can do whitelists. So let's say the World Bank is going to send $10 billion of aid to an African country or a development project. Currently, you experience corruption anywhere between 8 to 22% on World Bank projects going into African infrastructure. This is where you get around it. This is where you get around corruption, bribes, et cetera, because you're able to whitelist these labels and go direct to them. The wallet that receives it is the only wallet that can spend it, and they can only spend it with approved vendors. It makes sure that people get paid fair wages. It makes sure that child labor cannot occur. It makes sure that the only way this can function downstream is regulatory-based, trust-based interactions. This all comes together to give a seamless system that allows for delivery of payments through locked and unlocked mechanisms. Now, going forward, and what this really can mean for, one, Korea, as they are one of the leaders in the space, but others, is that this allows for an SGD CBDC settlement token on PVP through us. It allows us to have policy rules, holding limits, residency, enforced flight, but also gets where we can have quicker settlement, lower fees, and the ability to interact with other markets that typically are untapped to most investors. This is all done through treasury and liquidity management with intraday collateral 24/7. So interbank payments with programmable windows and limits, repo against tokenized collateral with real-time margining, cross-chain escrow without custodians by native right. As you can see here, we have built a full dashboard that operates as both the central bank and then state bank and then commercial bank down entire ecosystem. This has everything from reserves management, bond ladders, portfolio rebalancing, redemptions, FX monitoring, compliance, tech, more. Why did we do this and why was this important? I've been at this conference for a couple of years now, and I can say we've been talking about a lot of the same things. The biggest problem with that is that we aren't meeting the people where they're at. To try to get a bank to come onto blockchain is a big ask. So instead, what we need to do is make it a simpler and easier environment for them. This entire layout, UI, UX, is exactly what most banks are used to with the newer systems, and significant upgrades from what banks that are running on, say, technology from 2005 or even 1995 use. It allows them to have faster monitoring of what's happening, real-time data. So for example, a reserve ratio being updated on an hour-by-hour basis allows you to understand if you're at risk of a potential bank run, or for example, if the FX currency is experiencing slippage due to foreign pressures on the currency. It would stop, for example, the ability for the pound, as it was shorted many, many years ago, it would allow for that to be prevented because you would in real time see that there's foreign actors going against your currency and you can move gold into a bank-controlled currency account to be able to stabilize your currency. Now, what does this look like from an implementation and where are we working? So currently we work across 6 different countries. We are currently in the sandbox environment. This is talking issuance, basic PVP, DVP, ISO 22 adapters, all the way over to the legislation, regulatory, et cetera. This involves everything from the central bank, president, parliament, et cetera. Then you go to the next phase. The next phase starts building the assets and corridors. So day 1, this will only operate inside of the country itself, but very quickly this can plug and play to any stablecoin, any blockchain that has regulated assets, CBDCs, stocks, et cetera, RWAs, stocks, et cetera, and then it rolls out fully. The broader banks, asset classes, 24/7 ops, and resilience. It's a pretty quick turnaround for banking. It's something that often scares them, so we find that they often are the most resistant as opposed to the governments, which make this part of their, often 2030 or 2040 plans for how they're going to grow their economies. Now, a big part of this is to make sure that we keep this interoperable not just to crypto, but also to all of banking. So we operate with a gateway node inside the bank perimeter with HSM-backed keys. This allows webhooks back to core ledger, but gives them the ability to operate in any system, ecosystem they are used to today. This also allows us to be able to interact across any type of ecosystem that we are plugging and playing into, whether it's our own or another. We know for a fact that there will be 5 to 6 other blockchains that will be going after this market. We're not here to compete with them. We're here to help us all be able to build the same thing together. The biggest part of this is to have this interoperability and this work together. So how do we do this? What we do is we use our proof of authority to create a super node with the other chain, so we can move seamlessly across from a CBDC1 to CBDC2 to CBDC3, irregardless of what chain it went on in the first place. This allows us to have a different kind of partnership with blockchains that previously does not exist, and it's something that makes it the kind of the future of how we see settlement and assets move across borders by being able to work with others rather than always try to compete. Lastly is that this gives a public permission governance with central bank voice, or it can be a central bank-led initiative, or it can be a personal-led initiative. We're not here to tell governments or people how they should run their economies. Instead, we're here to help advise on how they create this. We have done everything from council modes, which create regulated institutions and public sector on key changes. This typically functions through a department of ministry, Ministry of Finance, Ministry of Resources, exports, imports, along with a parliamentary team, and then the central bank itself. We've also done this, though, through full central bank authority. Central banks have their regular systems. We just, instead of trying to do anything different, we just plug and play into the current ecosystem without change. This also allows for on-chain transparency and proposals/votes. Not that we've worked with a country yet, but there have been a few countries that have started to propose giving a voice to their people when it comes to FX. Imagine, say, for the United States, the Fed rates, you could have a voice vote that's approved. Now, it probably won't happen in the United States anytime soon, but you could see it happen in smaller countries, Brunei to some of the African countries that could be more likely to support this, or even a parliamentary-like system where you could actually see the votes in real time of what occurs. This also allows for separation of CBDC policy, issuer-controlled sidechain, to anything we do ourselves. All we do as a blockchain is we make sure we provide the interoperable rails and the settlement layer, whereas they can run their CBDCs fully independently of everyone else. Lastly is the compliance first. So this gives bank-grade performance right across network, programmable money, no issues with travel rules, no issues with ZK. It puts it at scale in a manner that we've never seen before. And that is it for the presentation. If you'd like to work with us, talk with us, feel free to reach out here. Would love to talk with any of you guys on ways to partner.
네.